All right, we're back. Let's get to a few calls of the day, starting with one of Farmer Jim's favorite stocks. It's Paramount, and it's up nicely. Not as high as it was earlier in the session, still up 4%. Bank of America, all right, buy. Price target 32 from 24. They talk about two outcomes, and I want you to tell me which outcome you think is more likely, okay? Because they say which one they think is going to happen. Number one, they execute on their pivot towards streaming. Okay, I'm shortening it, but that's choice number one. Number two, they struggle and then they sell. And they do at a significant premium, which is the likely view according to the analyst over at B of A.
Obviously, I'm happy with the report. My answer to your question is option one. I think the pivot is successful. It's continuing to be successful. And we'll see in the next earnings report. I mean, they've been adding subscribers hand over fist. But I think, look, there's a few things to say here. On the breakup value or the sale value, I don't think Sherry Redstone's going to sell. So I don't, it's a good way of looking at it. The stock trades at 60% of book value, but how do you get management to sell? I'm not sure you do. Why it's a good way still to look at it, though, is because if you're focused on earnings right now, this is the peak investment year right now, not next year, right now. Okay, and so if you look at the earnings, you say, oh my God, it's so expensive, and how are they going to fund the dividend? But what you miss is that next year is the inflection point. Earnings, free cash flow, everything should be going up if, Scott, the subscriber counts continue to come in as they have been, which is to say great. And so I'm in option one. And you think that's more likely outcome than option two? Here's why I think it's more likely, is because quarter after quarter, these guys deliver on the subscriber count, quarter after quarter. And they haven't gotten the respect. I'm hopeful that this is...
Well, they're adding subscribers, but the growth numbers are not what they were, are they?
No, the growth numbers have been fine. It's the spend on the content, right? That's what's knocked them down, is how much they're spending to get these subscribers. But after a while, those subscribers equate to profitability, and the spend should be, at this moment, at peak and coming out of it in terms of the amount. I think what's going to be interesting here, Scott, is you'll remember last year, I'm sure you'll remember, it was like, was anyone left to downgrade this stock? I mean, it was hilarious, except it wasn't for me.
Jim? Well, I mean, it's down 43% a year.
Let's see if this starts other analysts looking at this and saying, look, it just got bear mauled too much. Josh.
Hey, I'm curious if you have any concerns about the very heavy reliance of Paramount as a product on one creator. Taylor Sheridan is making all the shows that people are watching, with a few exceptions. 1923, 1883, the Yellowstone spinoffs, Mayor of Kingstown, Tulsa King. Like, do they have anything else cooking that anyone is interested in? Because it seems like a precarious situation if you're relying solely on one studio or one creator or one genre, and all three of those appear to be the case here.
Yeah, I mean, I hear the question. I'm not worried about it. I mean, I think you can look at the studios, the movie studios, as a key example, and I know Paramount would and does. And they point to the success of things like Top Gun Maverick in driving subscriber upticks, meaning that they put Top Gun Maverick on Paramount Plus, and then they drive subscriber counts. So, it's a good point you make. It's not particularly keeping me up at night, though, because of what I see from the studios, just as an example. Then there's sports, right? CBS Sports. Yes, I know you'll point out you can get that live on TV, but that's still, to the overall Paramount value, pretty significant.
Josh, what do you think about Ulta Beauty, which is the other stock I wanted to talk to you about, because it did get initiated with a buy at Canaccord. You did have it as one of your stock summit picks.
Yeah, I think it's recession-proof. If you talk to people under the age of 50, and it's a private moment where no one else overhears what's being said, and you ask them, like, what's the most important thing that you really care about? It's what you look like on Zoom or Instagram and or TikTok, and that's just not going to change. And Ulta is the arms dealer to the new reality that we all live in, which is hybrid, which is on screen all the time. Everyone's an influencer, et cetera. So it's a 19 forward PE, 10% expected earnings per share growth. I don't know why that couldn't be exceeded. It's up 12% year to date. It's up 33% over the past year. Most of what I'm saying, I think people already understand. It's not a variant perception, but it doesn't need to be. I think it's a popular trade that could stay popular.